Business Review, a daily program that delves into the latest and most significant economic stories. From stock markets to currency news, Business Review covers the most up-to-date developments in the global financial world.
Eurozone governments gave their final approval on May the 8th to the first part of a €550 billion rescue plan for states hit hard by the coronavirus pandemic, although other elements of the rescue package have yet to be agreed upon. Finance ministers of the 19-nation region signed off on details of cheap long-term credit lines that will be made available by the European Stability Mechanism, the ESM, the bloc's rescue fund, to countries that need cash to cover extraordinary health costs caused by the outbreak. After the online meeting, the chair of the meeting, Mario Centeno, said that reflecting the exceptional nature of the crisis, we've agreed on favorable and adequate financial terms. But it's unclear whether the money will be used by Italy, the country that needs it the most and has the highest debt servicing costs and the severity of the outbreak, which has killed more than any other European state but Britain. Despite repeated guarantees money would flow with no strings attached, many in Italy's Five Star, the largest party in the ruling coalition, remain opposed to using ESM loans. The ESM played a key role in the rescue of Greece, Cyprus, Ireland, Spain and Portugal during the last decade's Eurozone debt crisis and will offer credit lines worth 2% of the requesting country's gross domestic product and up to €240 billion for the whole region. The loans will be made available in the coming weeks, pending procedural approvals and until the end of 2022. Countries still need to finalize the other two legs of the rescue package worth another €300 billion, combined a temporary employment support scheme and a guarantee fund that would provide liquidity to companies hit by the crisis. Final deals on these tools are expected by the end of the month. Much more difficult, however, it appears to be the establishment of a recovery fund, which could be worth €1 trillion and provide grants and loans to help states revive their economies. Meanwhile, the EU Economics Commissioner, Paolo Gentiloni, said at a separate press conference that officials are really at crossroads, calling for the establishment in autumn of a separate recovery fund. Countries remain divided over the way this fund would work and on whether it should also use grants in addition to loans, with the Netherlands leading a group opposed to the idea of grants.
The US unemployment rate jumped to 14.7% in April, the highest level since the Great Depression during the 1930s. Analysts, however, have expressed the belief that the worst is yet to come. New data showed that US employers cut a staggering 20.5 million jobs in April, erasing a decade of job gains since the global financial crisis of 2007 and 2008, and pushing the unemployment rate to a record 14.7%. According to the US Bureau of Labor Statistics, in April, employment in leisure and hospitality plummeted by 7.7 million, or 47%. The number of unemployed persons who reported being on temporary layoff surged about tenfold to 18.1 million in April, while the number of permanent job losses increased by 544,000 to 2 million. While this marks the highest level of unemployment since the Great Depression, analysts said the figure does not capture the full scale of the COVID-19-induced job crisis, and the worst is yet to come. John Clegg, dean of the business school at the University of Miami, said that some experts believe that that's actually 5 percentage points less than what the real unemployment rate is, because many people are around part-time work at this point, and many people have not even been able to file claims because so many people are trying to file unemployment claims they simply cannot get through to make the filing. The dean said he believes that the high unemployment rate will have a major impact on low and middle income people. He added the US economy is likely to enter a recession, as the situation in the coming months will be worse. The professor stressed there's no doubt that the economy is really going to suffer, not just in a short term, but with the amount of fiscal stimulus and borrowing that the government has to undertake to stabilize the situation. This overhang of debt is going to last for many decades to come.
The CEO of Basuglu Caravan, a leading caravan manufacturer, Engin Basuglu, said that the caravan sales have surged in Turkey as Turks gear up for summer season, overshadowed by the coronavirus outbreak. Basuglu said that the sales have increased more than 50% since March, the onset of the outbreak in Turkey, adding the company expects a 60% surge in sales in the summer. He said they've already been receiving orders from where the outbreak is slowing down, and shipments will be made to South Korea and Norway next week. Turkey has one of the highest numbers of recorded COVID-19 cases in the world, but has kept the death toll well below levels in Western Europe and the United States, and the government's now looking to gradually reopen. Tourism is a major source of income for the country, helping to rein in its current account deficit, especially in the summer. But with international and domestic flights halted, tourism is also slammed. Many holidaymakers who may shy away from going to a hotel this summer, camping may be a better option. Earlier this week, Turkey said it will start to reduce coronavirus containment measures, lifting intercity travel restrictions in 7 provinces and easing a curfew imposed on the elderly and people less than 20 years old. Malls, barbershops, and some stores will be allowed to open on May the 11th, provided they abide by the so-called normalization rules, and universities should return to their academic calendar on June the 15th.
China's foreign exchange reserves expanded to 3.0915 trillion US dollars at the end of April, from 3.0606 trillion dollars at the end of March. According to data from the People's Bank of China, the amount exceeded market expectations of $3.056 trillion and ended a falling streak since January. Wang Chanyang, a spokesperson for the State Administration of Foreign Exchange, attributed the pickup in April to multiple factors, such as valuation changes in exchange rates and asset price changes. Despite a complex external economic and financial environment amid the COVID-19 pandemic, Wang said the fundamentals for China's long-term sound development remain unchanged, and its economy has great resilience, potential and room to maneuver, providing a solid foundation for the stability of foreign exchange reserves. Echoing Wang's sentiment, Wen Bin, chief analyst at China Minsheng Bank, said positive signs have emerged for the Chinese economy. As the effects of the counter-cyclical regulations filtered through, the situation of the country's epidemic contaminant continued to improve, and businesses and production further recovered. Wen also noted that the international investors have remained upbeat about the country's economic outlook, and with the capital inflows, the country will see more balanced cross-border capital flows. According to the People's Bank of China data, the country's gold reserves remained unchanged in April at 62.64 million ounces, equivalent to 106.67 billion US dollars.
US President Donald Trump said on May the 7th that his administration was considering further economic measures, possibly via executive orders, to provide help against the economic fallout from the virus. In remarks to reporters at the White House, Trump appeared to confirm the possibility of further postponement of the deadline for filing 2019 federal income tax returns. It's already been extended by 3 months to July the 15th. The Congress has passed major coronavirus relief bills worth nearly $3 trillion, including payments of $1,200 to many individuals and more than $650 billion in loans to small businesses. Asked whether there would be more direct payments to individuals, Trump said, well, something good could happen. The coronavirus has killed more than 75,000 people and infected more than 1.25 million in the United States. About 33.5 million have filed claims for unemployment benefits since March the 21st. That's equivalent to roughly 1 in every 5 workers. Trump said the greatest thing that could happen was to get our country open again and get it going again and have people get these great jobs again. Trump also said he backs legislation to protect businesses from liability in case of transmission of the novel coronavirus, and he would lift air travel restrictions at the appropriate time when everybody cleans up.
This has been Business Review, your daily source for the most critical financial stories. Tune in next time for the latest financial news impacting the world economy.